Hello and welcome to another episode of the Mark Moss Show, where we talk about the decentralized revolution. Of course, we're talking about the way the world is changing. As, of course, we look at it through the lens of politics, finance, and technology. And, of course, that technology is Bitcoin. That is changing the world, of course, in so many ways. It's always technology that changes the world. I try to bring to you some, education so you can see things differently, some late-breaking news, and, of course, some interesting guests. And that's what I have today. I'm joined in studio with Lisa Hough. Did I say that right? Hough. Oh, okay.
Huff, like tough.
Okay, it's spelled differently. Lisa Hough. There you go. And she is somewhat of an energy expert, energy and Bitcoin expert. So I'm excited to dig in. Anyway, Lisa, thanks for joining me today.
Thanks for having me, Mark Moss.
Sorry I got the name wrong. It looks like it's spelled differently. Everyone does. Yeah, well, it's not spelled that way. So, we were talking earlier about, some of my run-ins in the energy market, and I know you're in the energy capital of, I guess, America, at least Texas. Oh, the world, you would call it.
Yeah, Houston, energy capital of the world.
Okay.
Bitcoin mining capital of the world.
More than Saudi Arabia?
According to me, it's Houston.
Okay, according to you. Got it. That works. Lisa, I want to dig in a little bit. Obviously, I want to talk about Bitcoin mining for sure. But if we start from a little bit zoomed out location, I mean, you started your career as a natural gas trader. Is that right?
That's right.
Yeah. So do you have some views on what's going on with natural gas, in the United States and globally, and how those markets are kind of working? Because it seems like obviously we see massive problems in Europe with natural gas, and then we can see how the U.S. Natural gas market is seeming to be completely disconnected from the global natural gas markets. So as a trader, I'm curious if you have any views on that, potentially, what will happen with the U.S. being able to export enough natural gas to get into more of a global price in regards to that?
Yeah. So I wouldn't consider myself an energy expert anymore. I traded natural gas a very long time ago.
Okay.
I worked for Enron, PG&E, Southern Company, so a lot of utilities as well as, spec trading shops, and learned a lot about the energy business. So hard assets such as salt dome storage, generation assets, pipeline capacity, how all that works. And I loosely follow energy, especially during COVID when oil went to -30.
Yeah.
Of course, I was deep in study of what was actually going on, and it was quite simple, as you know. More supply than demand, so people had to pay to have their production taken by somebody. Yep. In Cushing, Oklahoma. So anyway, where do I see energy globally? I think that we are really at a place of struggle. And I say that because I believe that we're fighting domestically with each other over the ESG narrative. And yet the global demand for energy continues to rise, coupled with Russia eliminating supply for parts of Europe, Ukraine, coupled with Saudi Arabia and the Arab nations lowering OPEC supply. A couple of weeks ago, I attended a conference at University of Texas. It was an energy conference, and every speaker and everyone there was really of the belief that Jeff Curry at Goldman Sachs called for 2 years ago, probably. Higher energy prices, more geopolitical risk on the horizon.
Yeah. You summed it up really well when you talked about, oil dropping to -30 and really boiled it down. As complex as these things can seem, they're actually very simple, and it boils down to supply and demand. Right? So that's what drives price.
Yeah, it does. And most people don't have a feel for what physical commodity transfer looks like. They don't exactly know. They know that maybe natural gas is required for them to turn their light switch on at home, but they're not aware that it gets produced out in the Gulf of Mexico, it gets brought onshore, put into one of many pipelines in the Gulf Coast, and depending on the demand at delivery points, so depending on how much gas Calpine, for example, one of the largest power producers in the country, also based here in Houston, depending on what they need, supply either goes to them or others like them, or it goes into storage.
Yeah.
And the arbitrage around those activities is what makes markets, and it's what makes markets strong. So I'm a huge advocate for free markets. Again, I think this is, one piece of why I'm so heavily vocal about the ESG narrative. I think that it's dangerous in so many ways, largely because if we don't have onshore energy, we don't have onshore national security. And if people don't understand that after the Russia-Ukraine battle and what that really has looked like throughout Europe and how the energy bleed has affected all of Europe, I guess you're not smart, because it's really pretty obvious. I don't think you have to be an energy expert to go, probably be better off if I made this here at home.
Yeah. I think people aren't smart. They haven't ever, most people haven't stopped to actually think through past a second, third, fourth, fifth order, thinking. And so they go, oh, well, I guess we got to save the climate, cut down on natural gas. They don't really understand what that means. It's like the fish doesn't know it's in water, so to speak, right? But if you would just take time to think through this a little bit, to the kind of point you're making, like if you don't have savings and something bad happens to you, you have no reserves. Like you're a slave, you can't quit your job. If the U.S. doesn't have reserves of energy, like our oil reserves, that could be a problem in time of need. In California, where I'm at, which you can berate me later on that, we have seen a big push to get rid of all natural gas in the state. I'm working with someone to add an addition into my house. I'm not even allowed to run natural gas into that.
Is that right?
And my natural gas bill has gone up by 400% in the last year, while natural gas prices in the U.S. have come down.
Wow. Geez.
Yeah.
Not allowed to pipe in natural gas into your house.
Not in the new area I want to build onto.
Yeah, I find that funny, given that the EU has, in the last 12 months, has now deemed natural gas to be a green energy source again. Remember, they had said it was a dirty energy source. Yeah. And then, nuclear was shut down, and the Russia situation has happened, and the forecast was for a very cold winter. Thankfully they didn't get that. So they deemed natural gas to be this clean source of energy. So now, okay, that's interesting. Now you've got California saying
you can't put it in any new houses. No new houses can have it.
Huh.
And we had a wood burning fireplace, and we wanted to put a gas into our fireplace. So we had someone come out and just run the gas line and drill through the thing. And my wife went to go find gas logs, and she went on HomeDepot.com or whatever it was, Lowe's.com, and we can't ship them to California.
You've got to.
We couldn't get logs shipped to California. My wife had to go onto Craigslist and drive 30 minutes from the house and meet somebody in a back alley and do a cash deal to get gas logs. Like I'm not joking. I'm joking about the back alley piece, but like literally on Craigslist, and had to go do a cash deal to get gas logs in California because no one would ship them here. They're all for sale, but we just can't get them here. Like the insanity of that. And
yeah, see, that's just not people aren't really thinking through the second or third order effects of energy usage. So in other countries where there's new sources of energy that are coming in and available for use, the main benefit is yes, that there's reliable gas or a reliable fuel, carbon-based fuel source. But the second layer derivative is that they're not burning wood in their homes, and they're not collectively burning garbage, which then they inhale, which lead to health problems.
Yeah. Yeah. So they'd rather have us burning wood in the fireplace than clean burning natural gas, which is pretty insane. I want to dig more into this ESG, specifically this narrative and how that affects supply and demand, where that goes, and how that affects Bitcoin. But unfortunately, to the kind of point you're making, it seems like we're going to see prices of energy going up. When energy prices go up, everything goes up. But going back to this ESG narrative, at the end of the day, back to making things very simple, it just crimps supply, right? So they're pushing these policies in place that would ultimately crimp supply and that would push prices up. Is that how you see that?
Yeah, I would say that that's the second or third order effect. I think we really have to look at the root of ESG and where did this come from. And I was actually researching for your show. I wanted to brush up on my ESG Even though I talk about it all the time, I wanted to, be thoughtful about what I said today. And I discovered that it was actually brought into existence by the UN in the early 2000s as a way to reward companies that had these virtuous properties about them. But I would offer to your listeners that, to me, ESG has become something of virtue signaling and less about the returns. And so the way that the ESG narrative has played out in the US and actually around the world is that ESG just doesn't pay to be responsible. So I heard this analogy recently that ESG is like giving wheatgrass to a cancer patient. But ESG is worse because it's the equivalent of giving the cancer patient wheatgrass and delaying the chemotherapy. So what do I mean by that? I mean that it's created two separate capital market structures. It's created a capital market structure that is free of, carbon or ESG related topics, and it's created the other market. And anytime that we have government interference, and that's what that is, right? That's state interference. You don't have a free market, and we must have free markets, and we must advocate and fight for free markets, because without them, we have no true economic activity. All economic activity is tainted. So,
yeah, by coming up with this arbitrary scoring system, it's a way to really kind of impose controls, right? And so now they can force companies to get this score, which is made up of environmental, social, and governance scores, which pushes all types of things from their environmental impact all the way through their diversity on their board. And it takes away, to your point, the free market, which is ironic because, it seems like if these business owners are so greedy and we need to make them be more diversified, well, if they're so greedy, wouldn't they hire the best person for the job? Like, if I'm so greedy, I want my business to do well, then I'm going to hire the best person. I don't care what race, sex, color, whatever they are. And so it's sort of like a contradiction there.
Well, it's interesting. So the development and the path that BlackRock has taken. So a few years ago, you probably remember, they came out with a bunch of exchange traded funds that were ESG compliant.
Yeah.
And they really heavily marketed those funds. And now recently, they have issued a statement. I'm going to read it to you just so you get the full, this is exactly what they said. We believe that greenwashing is a risk to investors and detrimental to asset manager industry credibility. There is no evidence that buying low carbon ETFs leads to less carbon use. Mm-hmm. So ESG, should be noted, those investments have underperformed every other investment,
Yep.
every other type of investment. Of course, what's led the way in recent years is energy.
Yep.
There's a group called the Climate Action Plus 100 that claims to represent 50% of all asset managers, $60 trillion in assets under management.
Wow.
And in coordination, they've told companies that they need to cut their emissions or really improve their ESG metric. So this caused, of course, that, so what's the effect of that? We eventually see prices spike at the pump because there's underinvestment into, with capital markets, into businesses that are producing energy onshore, like we talked about,
Yep.
which is necessary for national security. So it leads to a spike in prices at the pump. And in the US, we have a term for that. That's antitrust.
Yeah.
Right? A group gathering together that influences price.
Yeah, that's a good point.
So, sorry.
No, go ahead. I said that's a good point. I haven't really thought about it like that.
So BlackRock, Vanguard, and State Street voted on new directors at Exxon. This is, I think, a year or two or three ago.
Yep.
And after they did, Exxon cut their production targets by 20%. So think about, okay, they cut their production targets. What does that mean? That means that they stopped projects. They stopped exploration projects around the world. Who was there to pick those projects up, right? Many were already in the works of being developed.
Yep.
Who do you think was there to pick it up?
Asia and China specifically, yeah.
PetroChina. PetroChina picked up the majority of those assets. Okay, now let's see if you're paying attention. Who's the largest shareholder of PetroChina? BlackRock.
BlackRock, I'm guessing, yeah.
Right. I mean, this is not a free market when we have actors who influence or, influence is a light word for what they're doing to these energy companies. We do not need states in energy markets. We don't need states in markets, period. Former Treasury Secretary Sarah Raskin has said that this forced investment coming through states is an attack on sound investment practices. It forces investments favored by politicians. That was a quote.
Yeah.
And anyway, I could ramble on about
You're absolutely
ESG.
right.
I find it's very offensive, and it's affected my family and my friends. Bank of Montreal, a couple of years ago, they pulled out of their natural resource group. They had 90 employees in natural resources, and one of my family members was one of those managing directors. And went to work one day, and BMO, right? Bank of Montreal. So enormous energy assets in Canada. They say, no, we're not going to bank energy anymore.
Yeah. It hits everybody. Back to here where I'm at, my gas bill went from $100 a month to $400 a month. And, while I certainly don't like that, I can afford that. But what about the people that can't? It affects everybody. So it's insane. I have seen quite a bit of backlash building. Obviously, we've seen a lot of Republican-led states, first started divesting their funds from BlackRock. Billions of dollars were pulled from BlackRock because of that. And then I think was there 26 states that have filed into a lawsuit about this ESG investing, Texas, of course, being one of those. And so then there's a lot of backlash. I believe it was Vanguard that now has abandoned their net zero goals. And now BlackRock is running PR like this going, whoa, hang on. We're not as bad as you think we are. So there's definitely a shift happening. But I think maybe just a shift in the narrative, maybe not so much in the underlying practices. Lisa, I want to get back into the kind of energy and the Bitcoin mining. But before, let's talk about the company that you're working for, Levelfield, and how you got over there.
Yeah, sure. Thank you. I joined Levelfield in July of last year. I went to them because I work for Bitcoin adoption. That's what drives me. That is my purpose. It's what I think I was put here on Earth to do. I've recently figured that out. Probably started figuring Bitcoin out in 2018. Really didn't dive in until late 2019, 2020, certainly when everybody was taking every online class at YouTube University and all of those things. I really got on the Bitcoin bandwagon, so much so that one of my friends said, you should really start a consulting practice and teach people about Bitcoin. I thought, well, all right, I was going to, go back to work in the energy business. Sure, I'll start teaching people about Bitcoin.
Yeah.
One thing led to another. I had one public company that was a client, many wealth managers, lots of high net worth folks. And I was at a conference. I met Parker Lewis. I was at a conference in Austin and was just telling him about, he said, well, tell me about yourself. What do you do? What'd you do before that? Energy. Where do you live? Houston. Probably 2 weeks later, I was working for Unchained Capital because they wanted somebody to lead the Houston efforts to market for Unchained. And Unchained, as you know and others know, helps people hold their own keys for their Bitcoin.
Yeah, shout out to Unchained. They're a friend of the show. Yeah. I use them for the services, so check them out, Unchained Capital. But yeah, keep going.
Yeah, me too. Well, the difficult thing about holding your own keys is that not everyone is comfortable doing that. In fact, the vast majority of people are not yet comfortable doing it.
Yeah.
I don't find it to be difficult. I do find it to be a little nerve-wracking if I have to move, say a significant amount of Bitcoin. I don't know why, but I was recently with a Bitcoin core developer, who told me that he still breaks out in sweats if he moves more than about $50,000 in US dollars of Bitcoin. So
I always start with a little test every time. Let me just send a little bit first.
Well, Mark, I don't even want to tell you what happens when you do that, though. Let's say that you start with 5 Bitcoin, and you want to move those 5, and you say, okay, I'll move 0.1 Bitcoin to the test address and make sure that it's there. Well, you can verify where the test address is going to the right address. You can look at the address on your Trezor Ledger cold card, and you can verify the address, obviously, in the box of where you're filling it in, or the QR code where you're sending this. But then the other 4.99 Bitcoin, is created inside of a new change address. So to me, that's more frightening because you can't verify what the change address is. You just like have to hope that it is actually part of your transaction, which of course it is.
Yeah.
So for me, that's the scary part
Yeah.
is the test.
Yeah.
I would rather just move it. But anyway, I figured out that, gosh, people really have a hard time with this, and Levelfield approached me. I wasn't looking to leave Unchained. I love those guys, love Parker Lewis. I've learned more from Parker Lewis than anyone else in Bitcoin. Just being around him on a daily, weekly basis, it's just the stuff that seeps out of him and into you is like, oh my gosh, he's just this wealth of knowledge and history and really formulative thought. So Levelfield approached me and they said, hey, we're looking for somebody to lead our business development efforts. We are acquiring a U.S. bank, and we want to be the first bank where an individual can buy and hold Bitcoin. So I'm looking around going, there'd probably be more than 5 or 10% of us that have our own keys. This is probably a cause I can work for. I will work for helping a broader group of individuals hold Bitcoin. So we're in the regulatory process right now. I can't say too much more. We've announced that we're buying Burling Bank. Burling is the bank in the Chicago Board of Trade building. They are loved in their community. They're an old, I think 38-year-old family bank, community bank, very solid assets, not affected by the recent banking crisis at all. They're, I would say, the Boy Scouts of the banking community. I truly love them as individuals. So we're in the process of acquiring them, and part of that is you have to go through the federal regulatory, the banking agencies in order to get those approvals. So perhaps fourth quarter we will have the approval and finish that transaction. So right now we are not live, but eventually you'll be able to buy secure Bitcoin as well as have Bitcoin financial services like a pay me in Bitcoin option for your payroll, or a Bitcoin collateralized loan, or a Bitcoin rewards credit card.
Yeah, nice. I want to go back to, you said about 2018, you said you're working on Bitcoin, you're working for Bitcoin. It's the most important thing. You're on earth to do this. You started in 2018. What was that aha moment? What was that epiphany where all of a sudden you're like, shoot, this is something pretty important. I should be doing that.
I guess I always felt like I wasn't in control of my investments, and I'm definitely a type A person. Yet I didn't feel confident enough in the equity markets to make adequate assumptions in order to safeguard, my retirement. And when I discovered Bitcoin and really started learning about Bitcoin, I thought, well, in some ways, this is like super simple, right? All value in Bitcoin is derived from the fact that there only ever will be 21 million Bitcoin, fixed supply, right? Scarcity drives the value of Bitcoin. And, in some regards, obviously, it's quite complicated. So I really just began to dig deeper and deeper. And I think I fell in love with Bitcoin when I realized the human rights aspect of Bitcoin, the ability that it gives people to, walk across borders, right? It would be the only way you could walk from Russia into another country with 100% of your wealth.
Right.
What always goes through my mind is thinking back to World War II when the Jews were evacuating Germany and they had on coats and they were carrying, suitcases, and their pockets were stuffed with candlesticks and jewelry, and they're wearing all of their gold. And we don't need to do that anymore, obviously. Yeah. And in fact, Bitcoin, I heard today that Bitcoin is I think is used by 80% of Bitcoin transactions under $1,000 are being done in Africa,
yeah.
Right? So it's very heavily used in developing nations. We in the U.S. are slower to adopt, although we are adopting. I think
we just don't have the pain. The pain's not high enough here.
You're exactly
where
right.
The pain's high enough, people move.
You're exactly right.
Yeah.
So the pain, I came to it because I was in a painful position. Major life change, major life financial change, fixed amount of dollars. What am I going to do with this? Who am I going to trust to help me with this?
Yeah.
And I was smart enough to know that I should not be trading equities. Although I did that for 2 years. I traded my own book, so to speak. I traded the volatile tech stocks and I traded energy. And that's actually how I survived for 2 years. And I did very well. But I realized that that was never going to be a long-term thing for me, right? I was never going to learn technical analysis. I was never going to learn all the intricacies, not to mention just the counterparty risk always worried me. And I think that's what I love the most about Bitcoin is that there's no counterparty risk. And I think we know, right, that this is what sovereign nations see in the beauty of gold, which is why they're dumping U.S. treasuries and moving into gold. And I believe that they're moving into Bitcoin. We just don't know it.
And the part with trading is you're not providing any value to the world. And you had said something earlier, was like, you're like put on earth to do this. I read this quote recently and it said something like, the biggest fear in life isn't living a life where you haven't achieved anything. It's a fear of achieving something, but it was worth nothing. Something to that effect. Like you've worked your whole life and you've achieved big goals, but they were all worthless. And so wouldn't you rather work on something that's worth something that can be, beneficial for the world? And trading is certainly not that. So we were talking about how you came to Bitcoin. I would say that it's always when there's enough pain. We kind of talked about that before the break. And, kind of my story was I got so burned in the 2008 financial crisis that I had so much PTSD, I kept waiting for another banking collapse. And I was subscribed to this newsletter called Sovereign Man. Shout out to Simon Black at Sovereign Man, who I still read his stuff. And really beneficial, instrumental in my worldview. And he talks about why you wouldn't put all your money in one stock. Why do you have your whole life in one country? And he talks about the importance of this flag theory, or planting multiple flags. And so, if money's digital, why not have money in Singapore and Hong Kong and Panama and stuff like that? And I was so worried about another banking collapse, so I was in the process of working with one of his attorneys to move money set up a bank account in Panama, and I could deposit money there, earn a pretty good rate of return, and work towards a path of residency. And I took that was 2015, I took another look at Bitcoin. I was like, actually, that's kind of the same thing. I'm trying to get money. What I'm trying to do is get money out of the banking system. And I did. And then once I saw, wait a minute, this is actually a tool we can win with. Like, this is a way that we can actually change the world. Then I got to tell the whole world about it. So we did. Let's jump into natural gas or maybe just energy and mining. I know you're there, as you said, in Houston, in the energy capital of the world, certainly the Bitcoin mining capital of the world at this point. A lot of Bitcoin miners have moved there because of the energy policies that they've had there. However, just recently, it seems like the state is not being so friendly to some of the Bitcoin miners. I know there's this a bunch of noise, or a bunch of commotion, I should say, about this new bill where they want to take away their credits, I think is what's going on in that bill for the miners. Have you been paying attention to that?
So that came out last week, and truthfully, yes, I've watched a little bit of it. I was completely out of commission with a herniated disc last week, and didn't follow that as closely as I should have. However, I mean, I know the result is basically that it's proceeding into another section of the Texas government and going before others for consideration. And it's an interesting place where we are. We've got Ted Cruz, who is a Bitcoin hodler, attends the Digital Wildcatters Empower Conference. He spoke last year. We've got Greg Abbott, who is a supporter of what we're doing. ERCOT, I would say, is even in favor of Bitcoin mining. I know firsthand that there are large power producers who are now working with ERCOT, and this is like really new, working with ERCOT to develop, more than 500 megawatts, because they have basically come to an agreement and explained to ERCOT that this is a way to stabilize the grid. Some use the expression that Bitcoin mining is like a battery. I don't really I don't find that to be a great example. So it's a topic of much conversation.
Yeah.
What I find again, most disturbing is that it's like the state is trying to get involved with these in markets and manipulate the price. And, demand response. So demand response is basically the ability for ERCOT, the grid here in Texas, to make companies or make, big users of load shut down should power spike. So what happened in, I guess, February of 2021 was this Storm Uri.
Yeah.
And we had about 38 plants that went offline. 38 plants. And why? Because they weren't winterized, right? The Texas grid is actually really fragile. I think that a grid health should have about 40% excess demand at any time, excess supply at any time. And I believe Texas is somewhere less than 8. It might be less than 5%
Wow.
of, available power. So demand response. All right. So this isn't a new concept. This has been going on for a very long time within Texas. But the media is now painting this picture that Bitcoin miners are bad because we can react quickly if power is needed on the grid.
Yeah.
So they didn't feel the same way that the media didn't attack hospitals, and hospitals have participated. Steel plants participate. Big institutions participate. There are ways where the grid can shut down a large amount of power source. Now, of course, hospitals would be the last person that they'd turn off.
Right.
And, a steel plant also not a good option to turn off, because when they do, steel is manufactured and it takes a lot of heat. And if the steel is left to sit, I think for over an hour, or over 2 hours without a heat source, you've ruined the entire batch. Whereas with Bitcoin mining, it can turn off in, a minute or 2 or 3 and turn back on in a minute or 2 or 3
Yeah.
with no harm to the current production. Because as you know, the effort of the computer, which is mining Bitcoin, right, which is kind of a silly name, mining, where it's not like we're digging in the ground. That's what we all think of.
Processing transactions.
Yeah. I mean, it's happening in a split second.
Yeah. It's the best option. I mean, if you need this extra capacity, which of course you do, this goes back to kind of what we talked about starting out, which was having a reserve. We talked about the U.S. not having its own energy or getting rid of the petroleum reserves. And the point of having a reserve, so in the case of an emergency, you have backup. And so that's sort of what this is. This excess capacity could be used as a reserve, where it could be shut down and then it could be deployed when needed. And to your point, of all the different options that you have to shut down energy, the Bitcoin mining might be one of the best ones.
It for sure is. So I always think about, who influences the media, right? Where is the root
Yeah.
of this issue?
Where's it coming from?
And I would offer to you, if we think who is one of the biggest, heaviest, Bitcoin haters out there that people talk about, anytime he talks about Bitcoin, Twitter just goes wild.
Warren Buffett.
It's Warren Buffett, of course.
Yeah.
Right. So Warren Buffett, I have some notes I wanted to just share with you. In 2021, Berkshire announced that it was going to build 10 1 gigawatt peaker plants here in Texas. And they would be paid for by the ratepayers, right? So the customers. So me as a customer, an institution, or a huge industrial load pays the most. So Berkshire will get a fixed rate of return to build these power plants. It doesn't make any sense for them. I mean, fine if they want to build power plants and not fix our current plants. Like I said, there were 38 plants that went down during Uri. There was a huge computer glitch which caused power prices to spike. And yet the Texas Tribune, and there's I can't come up with the name of the company, there's an energy coalition basically that has said, and Greg Abbott, our governor, has agreed that it would be better to take all money and refortify our existing plants. But Berkshire says, no, we're not interested in helping you fortify your existing infrastructure. We want to build this new infrastructure. So what is in direct competition to a peaker plant?
Yeah.
What offers the same flexibility?
The on-demand load that can be shut down. It reminds me of Warren Buffett's partner, Charlie Munger, who says, show me the incentives and I show you the outcome.
Of course.
Yeah, always follow the incentives and they'll lead you right to the conspiracy every single time. It's interesting. If you're just tuning in, you're listening to The Mark Moss Show. I've been in studio with Lisa Hough. You can check her out on Twitter at Lisa_Hough, HOUGH_. And also check out her company that she's working with. You can check them out at Levelfield is the name, levelfield.us. Check it out. That's what we got today. Hopefully that was helpful for you to understand exactly what's going on and what is causing the supply-demand imbalance. That's what we got. Thanks so much for listening. Until next time.